All right, Nana. So, hi, friends. So, this is a very important session for people who are writing CMA Final SCMDM paper, as well as CMA Inter costing guys, as well as CA Inter. Typically, the video has been made keeping in mind CMA Final student, but of course, because the concept is standard costing, whoever wants to watch it as a standard costing lecture, you can. Now, this is a revision lecture. So, it's pretty obvious that I'll not be getting into the logics of the concepts. So I'll go in a flow where I'll be teaching you what is necessary to pass the exams. Am I clear? Especially CMA Final SCMDM paper. Because as you know, standard costing comes for 14 marks and it's pretty much compulsory question in every single attempt. So therefore, this becomes very important and it's actually easy to get the marks in comparison to decision making, marginal costing, as well as relevant costing, make or buy decisions, all those things. Okay. So lots of students have messaged me pretty much since a very long time asking for this standard costing. So that's the reason I'm doing it. And tomorrow you guys have got CMA final SCMDM exam, right? So all the best for you. And let's go with the session. Now, let me tell you very clearly, I'm not going to go with logics. I'm going to go with only those things which is relevant for passing the exams. Second point, whatever the method that I'm going to try over here. So this is the best method, Nana. With this method, you can solve any difficult, even international questions. CMA UK questions also have solved. Case studies also you can solve. So lots of permutation and combinations went in, and finally this method has been finalized by me as the best method. You got the point? If you're following any other method and then my method seems to be totally different for you, the formulas and stuff like that, I don't know. It's your choice at the end of the day. But trust me, once you go with me for another 30 minutes or 40 minutes, once I'm done with all the formulae, and then once I get into the sums, you'll understand why this method is highly regarded. Okay. Now, so what is standard costing? It's pretty simple. It's a technique of costing, and the purpose of standard costing is to control the cost as well as measure the performance. Okay. To understand standard costing, I gave you a simple idea over here. The first step is to set the standards. Once the standards are set, then actuals will happen. Then the difference between standards and actuals, we call it as variance. And then once the variance happens, there will be an investigation with respect to why that particular variance has happened. And through the investigation, they'll try to find a responsible person. Remember this word, this is very important. Person who is responsible for the variance. And then upon him, action will be taken, which we call it as a countermeasure. Because you're taking some sort of an action, they will ensure that they don't repeat the mistake again, and again you will set the standards, again actuals will happen, again variance will happen, again that variance will be investigated, and finally countermeasures will be taken to ensure that that mistake is not repeated again. So through this, indirectly you're actually trying to control the cost. At the same time, you're also measuring the performance. Got the point? Chalo. All these things, all concepts, Nana, because this is a revision session. I can't go through the concepts, I can't go through the logics, because that's not the priority right now. Got the point? So straight away, we'll get to the things that is necessary, important for us to solve the problems. That's all. To understand that, this is very important, Nana. Many students get confused over here. How many types of cost are there? Three types: budgeted cost, standard cost, as well as actual cost. Many people gets confused between budgeted cost and standard cost. Some of them, they still feel that they are nothing but the same. The answer is no. Budgeted cost means budgeted output into budgeted cost per unit. For your kind information, budgeted cost per unit can also be called a standard cost per unit. Sir, what is this, sir? Just now you said that budgeted cost and standard cost are different. Yes, they are different when it comes to total. But on per unit basis, they're actually referred as the same. Let's say budgeted cost per unit is 10. Standard cost per unit is also 10. But when it becomes budgeted cost, when you take this budgeted cost per unit or standard cost per unit, you multiply that with budgeted output, it becomes budgeted cost. You take the same budgeted cost per unit or standard cost per unit, you multiply that with actual output, then it becomes standard cost. Am I clear? So budgeted cost per unit or standard cost per unit, both are same. You multiply that with budgeted output, it becomes total budgeted cost. You multiply the same with actual output, it becomes total standard cost. Of course, actual cost is nothing but actual output into actual cost per unit. Now, the most important point that you need to understand is, if this and this remains the same on per unit basis, right? Then what is the basic difference between budgeted cost and standard cost? Here it is budgeted output. Here it is actual output, which means the difference is what, Nana? Volume. So therefore, the difference between budgeted cost and standard cost is nothing but volume. Keep that in mind. Okay. Then what about the variances that we are calculating? Because the chapter name is standard costing, right? So therefore, can I say I can also call budgeted cost as costs that are planned, what you plan at the beginning. Standard cost can also be called as costs that are allowed. Okay. Actual cost is nothing but cost that has been incurred. And for your kind information, the variances that we're going to calculate, especially cost variances, whether it is material, labor, variable overheads, fixed overheads, are the difference between standard cost and actual cost, which means what you allow versus what is incurred. It has got nothing to do with what has been planned, which is nothing but budgeted cost. Please keep this in mind. Now, because it's a revision session, I can't be repeating things multiple times because we have to save time. If you don't understand, you just watch the repeated, video multiple times. I'll keep this in the YouTube channel of mine. I'll not be removing it at a future date. I hope I'm clear, right? Now, okay, now we have seen three types of cost. This is very important for solving sums. Please try to understand, especially reconciliation based sums as well. But that types of profit is important. See here. How many types of cost we have got? Three. Similarly, there are three types of profit: budgeted profit, standard profit, actual profit. So what do you mean by budgeted profit? Same stuff. Budgeted profit per unit or margin per unit. M means margin. Budgeted profit per unit or margin per unit. You multiply that with budgeted sales, it becomes budgeted profit. You take the same stuff, multiply with actual sales, it becomes standard profit. So again, the difference is volume. Whenever you see the word budgeted and standard, the difference is always volume. Then what about actual profit? Actual sales into actual margin per unit. Margin is nothing but profit per unit. Clear? Okay. Then how many types of overheads are there? Those who are done with overheads chapter in your CA or CMA Inter, you should be clear with this particular concept when you are learning the concept of absorption. Anyways, now that is not the time, because otherwise this itself will take at least 30 minutes of explanation. So I don't want to get into that. Right now, just understand that. So right now, because it's a revision session, if you don't have the background, you just need to understand what is what. That's all. How many types of overheads are there? Three types. Budgeted overheads, absorbed, which can also be called as standard overheads. Third one is actual overheads. Okay. How to calculate budgeted overheads? Very simple. Budgeted output into budgeted rate per unit. This budgeted rate per unit, instead of multiplying with budgeted output, if you multiply with actual output, it automatically becomes standard overheads. This we have already learned in the form of cost as well as in the form of profit, correct? In profit also we have seen the same. In cost also we have seen the same. However, here we'll learn some new names. Okay. Budgeted rate per unit can also be called as standard rate per unit. वो तो ठीक है sir. Here also we have seen budgeted cost per unit can also be called as standard cost per unit, of course. One more name, it can also be called as absorption rate. One more name, recovery rate. One more name, predetermined rate. Clear? And also we already know the difference between budgeted and standard is nothing but volume. Whether it is profit or it is cost or it is overheads, at the end of the day, the difference between budget and standard is nothing but volume. Okay. Sir, standard overheads can also be called as absorbed overheads? Yes. Sir, can standard profit be called as absorbed profit? No. Can standard cost be called as absorbed cost? No. Only when it comes to overheads, it can also be called as absorbed overheads. The logic and all those things I can't explain right now. I've repeated the reason again so many times. Okay. Next, come to types of variances. How many types of variances are there? Two. Favorable, adverse. Why it is called favorable? Because it increases your actual profit. Why it is called adverse? Because it decreases your actual profit. Don't come to a conclusion that plus is favorable, minus is adverse. No, it's wrong. In case of cost, it is like that. In case of sales variances, it is reverse. So therefore, don't go with that. Those are all blind rules. Anyway, we'll try to learn that to solve the questions faster in our CA or CMA exams. Got it? But favorable means anything that increases your actual profit is favorable variance. Any variance that reduces your actual profit is adverse variance. Okay. Now, how many types of variances that we have got when it comes to CMA Final SCMDM paper for us? Very simple. When it comes to cost, there are three variances: material, labor, overheads. Okay. In overheads, you have got two types of overheads: variable and fixed. When it comes to sales variances, it's just a sales variance, but it is again further divided into two approaches: total approach, margin approach. Total approach means you'll be taking total selling price. Margin approach means you'll be taking only the profit, which we call it as a margin. Even in that profit also, there are two approaches: as per marginal costing system, as per absorption costing system. Marginal costing system means your profit will be referred as contribution. Absorption costing system means your profit will be referred as profit, which means you'll take real profit. Means margin approach means obviously you'll be taking margin, na? That budgeted margin or actual margin. As per marginal costing system means we are talking about contribution. As per absorption costing system means we are talking about profit. Got it? So whenever you see marginal costing system, the margin approach margin is referred as contribution. As per absorption costing system, the margin that we take is nothing but profit. Got it? Chalo. That much is enough. Okay. Pretty much every student asks me this particular doubt, sir. Some people say logics are important to calculate variances. Some say formulas are important. Well, when it comes to your both institutes, that is ICA as well as ICMI, at the end of the day, both are important. You need to go for both because there is a time constraint. We need to learn the formulas. Otherwise, we can't do them faster. At the same time, there are certain questions like 10% to 20%, which without understanding the logic, you can't do that. Now, when it comes to revision session, my priority is 85% to 90% of the questions, not the minority 10%. Got the point? Because we don't have time. When it comes to international exams, obviously you have to learn the logics. Anyways, now let's go for the formulas one by one. Nana, I'll show you the material that I've made ready for CMA Final SCMDM. Can you see the material over here? So this is a standard costing material, the power notes that I've made it ready. I'll be starting batch after the results in the month of August, SCMDM. In Hyderabad, the face-to-face classes will be started. But the point that you guys need to understand is that, as you can see, the material is purely concept-based and I made it very simple. If you can see, I've used my word also because I usually call the students Nana and all that. So all your doubts has been taken into picture over here. In price variance, why we are talking about actual quantity, why not standard quantity? And in usage variance, why are we using standard price, why not actual price? So all these doubts, as you can see, for everything I gave you the logic. These are all the logics on how the formulas has got created, the responsibility separation principle. For example, price variance means ultimately your responsibility is on the shoulders of purchase department, whether they bought at a right price or not. Therefore, you'll see the difference in price. Same goes with usage variance. Production department, did they use the right quantity or not? Did they use the right quantity or not? Therefore, the focus will be on quantity and price will remain constant. And why that price will remain constant, those logics also I've explained over here. So my material is purely based on logics, but the point is when it comes to the revision, we don't have that time. So I hope I gave you 100% clarity. Now, so stay with me, whatever the other formulas that we have ready, you have learned as for, and if you are not able to get that sort of comfort in standard costing, trust me, next 1 hour, you trust me, believe me, and be with me. I know tomorrow is your examination. Just go with the flow with respect to whatever that I teach. I'm telling you, I'll make standard costing dead easy for you. That's my promise. So whatever the method that you've already learned, forget about it and just follow whatever that I'm going to tell you. Okay, this is the easiest method. Even please try to understand, I've at least solved more than 500 questions in standard costing. I've solved Colin Drury book. I don't know how many of you have heard about it. Holmgren. All the international books I've solved. I've taught for CMA UK as well. So trust me when I say this is the best method that is available. Even reverse working sums can be done. Use this method in a very easy way. Missing figures will be there now. Those questions also can be done very easily. Reconciliation also can be done very easily through this particular method. So therefore, when I say this is the best, this is the best. Okay, just follow. Material cost variance divided into price variance and usage variance. Usage variance is divided into mix as well as yield. Now, when you read the question, you see whether the material is one type of material or multiple types of material like XY. If there is only one material, your entire material variances will stop here, which means cost will be divided into price and usage. If you have more than one type of material, like 2 or 3 or 4, then mix as well as yield will come. So ultimately, material cost variance is divided into price, usage. Usage is further divided into mix as well as yield. That's all. Okay. Now these formulas you need to by heart. Before we by heart the formulas, because we need to write it fast in the examination, logics and all I can explain, but as I told you multiple times, let's forget about it right now because it's a revision session. First one, SQ into SP. Second, AQ into AP. Third, AQ into SP. Fourth, RAQ into SP. Clear? So what is SQ? Standard quantity of raw material required for actual output. This is very, very, very important. Remember it like that only. Whenever I ask you SQ hereafter, you should say standard quantity of raw material required for actual output, or at least you should remember standard quantity for actual output. Standard quantity for actual output. Keep that in mind. I don't know whether you are able to connect or not. Why this is required? Because standard quantity for actual output is nothing but standard cost actually. Standard quantity for budgeted output will become budgeted cost, na? And we have just now learned that your variance is difference between standard cost and actual cost, not the budgeted cost. Now you can understand the logic behind this formula. I can explain, I can keep on explaining the logics, but we don't have time. You remember this? Cost variance is the difference between standard cost and actual cost. That is cost allowed and cost incurred. That's why we multiply that with actual output. Clear? As you can see here, SQ is nothing but standard quantity of raw material required for actual output. In other words, it is nothing but raw material allowed. Next, SP, standard price. AQ, actual quantity of raw material consumed for actual output. AP, actual price. RAQ, revised actual quantity. Sir, what is revised actual quantity? Actual quantity rewritten in standard proportion. Sir, what is RAQ? Actual quantity rewritten in standard proportion. Don't worry, we'll be solving sums as well. Right now, just learn the logics. Sorry, just learn the formula. Okay, sir. Now, say along with me. Material cost variance is this one that is divided into two. What are they? Price and usage. If there is single raw material, you'll stop here. If there are multiple raw materials, your usage will be further divided into mix as well as yield. That's all. Okay. How many formulas we have got? 4 formulas. Now 4 formulas will come when there are multiple raw materials. Suppose there is a single raw material and you stop here. Then 4 will not come. Only the first 3 will come. Am I clear? That's why I've created formulas like this. 4 will not come if there is single raw material. 4 will come only when there are multiple raw materials. Clear? Okay, fantastic. Now, say along with me all the formulas. First one, SQ into SP. Second, AQ into AP. Third, AQ into SP. Fourth, RAQ into SP. Clear? Right. Now, watch the video multiple times if you are not able to follow me, because here the intention is to save time. So, what is material cost variance? 1 minus 2. Then, price and usage. 3 minus 2, 1 minus 3 for usage. And finally, 4 minus 3 and 1 minus 4. So, this is just like a gears in a car. If you know how to drive a car, you'll understand the logic. Otherwise, chalta hai. You keep on repeating the same, because after this, all the variances, the formula are the same. For example, you can see here, labor variance. 1 minus 2, 3 minus 2, 1 minus 3, 4 minus 3, 1 minus 4. Same stuff only, na? Here also. 1 minus 2, 3 minus 2, 1 minus 3, 4 minus 3 and 1 minus 4. It's the same one. Chalo. Even for variable overheads also, it is the same. 1 minus 2, 3 minus 2, 1 minus 3. Fixed overheads also, it is the same. 1 minus 2, 3 minus 2, 1 minus 3, 4 minus 3, 1 minus 4. Last one is different. So therefore, sales variance also, it is the same. So once you learn, exactly the order will be the same. So you will be repeating this at least 50 times. Automatically, you'll remember that in your subconscious. Trust me, trust the process, trust the faculty, and go blindly. Chalo. So finally, you should be remembering this way. First, the entire classification, material cost variances, is divided into price and usage if there is single raw material. If there are multiple raw material, usage will be further divided into mix as well as yield. Clear? And how many formulas are there? 4. 1, 2, 3, 4. 1. SQ into SP. What is SQ? Standard quantity for actual output. Okay. SP, standard price. 2. AQ into AP. AQ is nothing but actual quantity of raw material consumed for actual output. AP is nothing but actual price. 3. AQ into SP. AQ we already know, SP we already know. Fourth, RAQ into SP. What is RAQ? Revised actual quantity. What is revised actual quantity? Actual quantity rewritten in standard proportion. Okay. Now let's come back to the formulas. Material cost variance 1 minus 2, then price 3 minus 2, then usage 1 minus 3, then mix 4 minus 3, and yield 1 minus 4. Now 4 minus 3 and 1 minus 4 will come only when there are multiple raw materials. If there is single raw material, this will not come. These two also will not come. So you'll be stopping over here and you'll be stopping over here. Same logic applies to labor variance as well. Clear? Hello, fantastic. Are we done with this? All the logics and all those things, I've told you all the logics over here, but we can't do that right now due to time constraint. Okay, shall we start solving sums? So let's do a couple of material variances problems, good problems, and then we'll come back for labor. Chalo. Now let's continue with the questions, Nana. This is your study material question only in your CMA material. I gave you lots of things over here, but now we'll not be going with all those things. This is our question bank. Let's go to the questions straight away. As I told you, we'll be solving good questions only, not the basic questions, because you have your examination tomorrow. SW Limited manufactures BXC by mixing 3 raw materials. Now, always remember, when it comes to material, any material variances, first you need to identify which is output, which is input. Very important. So you can see this BXC over here, this is nothing but output by mixing 3 raw materials itself. So 3 raw materials means more than one, which means you'll have cost variance, then you'll have what? Price, usage, mix as well as yield will come. All the 4 formulas will come. Okay. For every batch of 100 kg of BXC, which means this is your output, but here you should be focusing on the word batch. 100 kg of BXC. Okay, so that's your output. How much of input is needed? 125 kgs. So input is more than output. So input will get converted into output. Everybody knows this. Input is 125 kgs and output is only 100 kgs. That is the situation right now. While reading the question only, you need to understand what's happening. Next. In April 2021, in this month, 60 batches were prepared. Okay, 60 batches were prepared to produce an output of 5,600 kgs. Okay. right? For every batch, how much of raw metal you've used? 125 kgs for every batch, which means one single batch, 125 kgs. 60 batches means how much of raw metal you would have produced? I mean, 60 batches has been prepared to produce an output of 5600 kg. This is your actual output, which means 60 batches is your actual consumption. So your total actual consumption of the raw metal will be 60 batches into per batch 125 kgs of raw metal. So 125, which will come around how much? 7500. This will be your actual quantity. Anyways, chalo, then what else he has given? Raw materials, okay, standard mix is given, standard price is given, actual mix is given, actual price is given, quantity purchased is also given. Calculate relevant material variances. Very easy. So relevant material variances means what are all the things that we need to calculate over here? Very simple, sir. Will I be having material cost variance? Yes. That will be divided into what and what? Price variance and usage variance. Yes. Usage will be further divided into what and what? Mix variance and yield variance. Okay. What is the formula? 1 minus 2, 3 minus 2, 1 minus 3, 4 minus 3, 1 minus 4. And then you'll be having all the 4 formula. 1, 2, 3, 4. Correct? What is the first one? SQ into SP. Second one, AQ into AP. Third one, AQ into SP. Last one, RAQ into SP. You got the point? And you fill up all this, automatically all the variances will come. Once you get 1, 2, 3, 4, then automatically you'll be getting all these things. Na? It's pretty easy, right? Chalo. Fatafat, we'll be doing it. Here, okay. Want to solve. Here. Fatafat will do. 1, 2, 3, 4. What is the first one? SQ into SP. Okay. Second one, AQ into AP. Okay. Third one, AQ into SP. Next, RAQ into SP. That's it. You fill all these 4, then because you remember the formulas, your metal variance is done. That's all. Now SQ into SP. Let's try to put all the numbers that are available first of all for us. Okay. Now how many raw metals we have got? A, B, C. There are 3, na? Yeah. Standard mix is also given. Chalo. Now one by one, we'll fill it up. Stay with me. Now tell me one thing. What is the situation over here? First, I need to start with standard quantity. Now, I told you so many times, this is a question, right? Standard quantity is nothing but standard quantity for actual output, correct? Everybody? Right. Now, how to calculate that? So, let's start with this. This I need to calculate. SQ. So, SQ is nothing but standard quantity for actual output. If you can see the question, if you could remember, 125 kgs was the input and the output was 100 kgs, correct? This is the output and this is the input, correct? What is the actual output that we have got? If you can see the question, the actual output is 5600 kg. So for that actual output, how much should have been the input? How much should have been the input? That is nothing but SQ, isn't it? Just a second. So the logic is very simple, Nana. 125 kgs of input should give rise to 100 kgs of output. That is what is allowed. So which means if you have actually manufactured 5600 kgs of output, how much should have been the input? That is nothing but SQ. Na? SQ is nothing but what is allowed for output. For 100 kgs of output, what is allowed? 125 kgs. For 5600 kgs of actual output, how much is allowed? How much is allowed is nothing but SQ. So therefore, what will be your answer? 125 into 5600 divided by 100. How much we get, right? Standard quantity. 7000, right? So once you get 7000 as standard quantity, this has to be divided between A, B and C. In what ratio? Standard mix. What is the standard mix over here? 50, 30, 20. So therefore, 50%, 30%, 20%. Now 7000 into 50%, how much? 3500. 30%, 2100. 20%, 1400. Okay, so which means 3500. Then you have 2100. Then you have 1400. 1400. Okay. Now just SP is very easy. What is your standard price? It is given in the question. 20, 10, 5. Put it over here. 20, 10, 5. That will be your answer. Total it up. You get your 1. Actual quantity into actual price. Now what about actual quantity? Let's have a look into that. Now where is your actual quantity, Nana? If you can see the question. 60 batches were prepared to produce an output of 5600 kgs. Nana, please try to understand. Many people, they wrongly take 5600 as what? Actual quantity. No, 5600 kg is output. That's the reason at the beginning itself I said BXC is output. BXC is output, okay? I'm talking about input. We are talking about material variances. When I say actual quantity of input consumed. So for 5600 kgs of output BXC, how much is the actual quantity of input that has been consumed? 60 batches of input were consumed. Each batch of input has got how much kg of raw metal? 125 kg. Therefore, 60 batches into 125, 7500 is your actual quantity, which while reading the question itself, we have calculated. But 7500 is for all the A, B and C put together. How much is A, how much is B, how much is C? For that, we need to take actual mix. What is actual mix? 60%, 20%, 20%. So take that 60%, 20%, 20%. How much you get, Nana? 4500, 2250, 1500. That's all. 4500, 2250, 1500. Actual price is very easy. It's given in the question. 21, 8 and 6. So 21, 8, 6. Okay. Actual quantity into standard price. Actual quantity I already know. 4500, 2250, 1500 into what is your standard price? That also I know. 20, 10, 5. Easy. Standard price I already know, which is 20, 10, 5. Revised actual quantity I don't know. Very easy. Do I know total actual quantity? Yes. Total actual quantity is how much? 7500. This should be rewritten in standard mix or standard proportion. That becomes RAQ. What is standard mix? We already know. 50%, 30%, 20%. So 50%, 30%, 20%. How much you get? 3750, 2250, 1500. So 3750, 2250, 1500. That's all. So I've got 1, 2, 3, 4. You know the formula, right? 1 minus 2, 3 minus 2, 1 minus 3, 4 minus 3, 1 minus 4. That's all. Job is done. Chalo. Is that clear, everybody? Fantastic. Now let's move on to the next question. Next question is also steady metal question. It also has come in December 2023. So let's go for that. Now see, Anana, a brass foundry making castings. Immediately identify the finished good. The moment you see castings, it is nothing but finished good, or you can also call it as output. This is very important, Nana. This is where students gets confused. Okay, they don't know what is input, they don't know what is output. And when we are talking about sales variances, we should be taking the output. There you should not be confused with input, because sales means you will sell your output only, na. When we are talking about material variances or labor variances, we should be taking input, not the output. Clear? Which are transferred to the machine shop of the company at standards. Okay, very important. Stocks are kept at standard price. Whatever the stock that you have got, opening stock or closing stock, it is always kept at standard price, which means it is measured at standard price. Next, standard mixture, that mix is given 70%, 30%. Okay. Then standard price, material C 2400 per ton, material Z 650 per ton. The moment you see this, what you need to understand, sir, we have got multiple raw materials, which means I'll be getting mix as well as yield variance. Formula 4 also will come. Okay. Standard loss in melting, 5% of the input. If you know the logics, the moment you see this, you need to understand that we are talking about yield variance, but that's okay. Next, figures in respect of a costing period. What is that he has given? Commencing stock means it is nothing but opening stock. That is given for C. Opening stock is also given for Z. So here quantity is given in this column. Opening stock is given. Finishing stock is given, which means how much has been produced. Purchases has been given. Sorry, finishing stock means closing stock. Purchase has been given. Metal melted has been given. Output is given. Clear? Casting produced is nothing but output. We have seen that over here. Next, value is also given. Again, material Z in terms of tons is given, and value of material Z is also given. You are required to calculate price, mixture and yield variance. See, price, mixture and yield. Mixture and yield put together is nothing but usage. If you remember the formula, material cost variance is divided into what? Price variance, usage variance. Usage will be further divided into mix variance as well as yield variance. Now, what is asking in the question? Price, mix and yield. Why is asking specifically? Because mix and yield, if you total, it is nothing but usage, and usage plus price, if you total, it is nothing but cost. Therefore, specifically, he's asking you this, this and this. That's why all these three variances has been asked. Clear? Hello. What I have to do, very easy. First, we'll put the formula. Same stuff, because we have got multiple raw materials. So 1, 2, 3, 4. What is the first one? SQ into SP. Second one, AQ into AP. Third one, AQ into SP. Fourth one, RAQ into SP. Okay, right. How many materials we have got? Two materials. Material C and the other one is material Z. That's all. Once you are able to fill up all these four, problem is done. That's it. Very easy. Chalo. You guys are ready? Okay. First, we'll start with standard quantity. Now, what about standard quantity? Look at the question. Standard quantity means standard quantity for actual output. Correct? I told you many times. SQ means it is standard quantity of raw material required for actual output. Okay. So, which means I need to take input as well as output relationship. If you look at the question, did he talk about input output? Yes. There is a 5% loss of the input in terms of standard loss in melting, which means if your input is 100, there will be 5% loss and your output will be 95. You put that over here. Input is 100 means minus 5%, output will be 95. Clear? Right. Now, did he give you actual output in the question over here? Actual output is 375 tons. So, if input is 100, output will be 95. Your actual output is 375, which means what should have been your input? What should have been? Your input is nothing but SQ for AOP. SQ for AOP. Clear? Chalo. So, which means 375 into 100 divided by 95. That comes around, I've done the calculation, 394.74. And this is for material both C as well as Z. But I need to distribute them between C as well as Z. And that has to be in standard mix. What is your standard mix? Because we are talking about standard quantity, therefore standard mix, which is 70%, 30%. So 70%, 30%. How much you get standard quantity? 276.29, 118.41. So 276.29. Other one is 118.41, 118.41 into standard price. Do I have standard price in this particular question? See the question. Do I have standard price? Specifically, it is given 2400 standard price, and for material Z it is 650. 2400, 650. So 2400, this one is 650. That's all. Okay, now AQ into AP. What about AQ into AP, Nana? Do I know what is your total actual quantity? AQ means, is it actual quantity produced or actual quantity of raw materials consumed? AQ means, is it actual quantity produced or actual quantity of raw metal consumed? Actual quantity of raw metal consumed. Actual quantity produced means we are talking about finished good. So, AQ means actual quantity of raw metal consumed, Nana, not actual quantity of output produced. 375 is actual quantity of output produced. No, no, no. Actual quantity of input consumed. Actual quantity of raw metal consumed, which is 400. As you can see, metal melted. Raw metal is melted over here. So 400 tons is nothing but actual quantity consumed. So therefore, do I know actual quantity? Yes. How much is that? 400. Okay. That has to be distributed to material C and material Z in which ratio? Actual ratio. Do I know what is actual ratio over here? Look at the question. Do I know what is the actual ratio? How much should I be taking? You people tell me. 400 tons is total, Nana. How much should I be taking for material C as well as material Z? You might be asking me, sir, actual quantity is 400, sir. What mix we need to take? Here there is only one mix, na? Because 400 is C and Z put together. 400 is C and Z put together. How much is for C? How much is for Z? Sir, while calculating SQ for AOP also, we have got 375 na, sir. We have distributed that between C and Z in the ratio of standard mix, sir. Okay, sir. Actual quantity for C and Z put together is 400, sir, which is metal melted. So, metal melted, that 400 is given. Now, how to calculate actual quantity? Pretty simple, Nana. You see here, if you can look at the question, we have material C and material. Opening stock is given. Yes, sir. 100, 60. It is there in the question. I'm not picking the numbers out of somewhere. Commencing stock, opening stock, 100, 60. Purchases is also given. Consumption is also given. Got it? Chalo, now see here. So opening stock is given. Okay, for that we'll be adding what? Purchases. Okay, sir, how much is purchase, sir? Very simple. 300, right? For material Z, the purchase is 100. Okay. If you reduce closing stock, automatically it will give you actual quantity of raw metal consumed, which is nothing but AQ. Are you getting my point? Opening stock plus purchase minus closing stock will give you actual quantity of raw metal consumed. Sir, Do I have closing stock? Yes, sir. Here, finishing stock is given 110.50. Okay, 110.50. So opening stock plus purchase minus closing stock is nothing but raw metal that has been consumed. So 100 plus 300 minus 110. How much you get? 290. This is 110. There ends the matter. That's all. You've got 290. You got 110. Total is exactly 400. Therefore, here 290, 110. All right. Now, what about actual price? Here there is a problem, sir. How to manage the actual price, sir? There is that I don't know. That is a problem. So what I'll do is that same whatever the calculation that you have put here, I'll add one more column. That column will be rupees column. Sir, what is this rupees column? Just wait and watch. Okay. Just go with the calculation. You'll understand. Sir, opening stock of raw metal is 100. Na? What is the value of it? Very simple, sir. If you can look at the question, he clearly said that all the stocks are kept at standard price. So which means standard price is 2400 and 650. Therefore, opening stock will be kept at standard price, which means this has to be 100 into 2400, which means it will be 2,40,000 opening stock. Even for Z also 60 into 650 because the standard price is that one, which means the value of the stock will be 39,000. Clear? Okay. Purchases though it is given in the question. How much is that? 7,32,500, 62,500. 7,32,500, 62,500. Sir, what about closing stock? Again, the stock, whether it is opening or closing, it doesn't matter. Stock will be valued at standard price. That's what he has given here. Company at standard, stocks are kept at standard price. That's all. Whether it is opening or closing, stocks are kept at standard price. So which means here also it will be 110 into 2400 standard price. Yes. Here also it will be 50 into 650. Yes. 50 into 650. How much? 32,500. Here it will be 2,64,000. Now tell me the actual quantity of raw metal consumed in terms of rupees. This will be 7,08,500. This will be 69,000. That will be your answer over here. You got the point, everybody? So I will write it together instead of writing it, individually. 7,08,500, and for material Z it will be 69,000. Total will be yours. Got the point? So instead of writing actual quantity into actual price, what I've done is actual quantity into actual price put together. This is the value. Now, why are you writing like this, sir? Why can't you write 290 into something like that? Because we know actual quantity. We can't do that over here because stocks are valued differently. Purchases are valued differently. Therefore, we can't take a common price. Are you able to understand? Stocks are valued at standard price and purchases value are different. Therefore, we need to calculate them individually and then total it up. Finally, you will be getting the total number, that is quantity into price. Put together, you will get total value. That's why I did not write here AQ into AP separately. I have written the complete number. Clear? Next. Actual quantity into SP. Do I know actual quantity? Yes, sir. Just now we have calculated 290, 110. The actual quantity is 290, 110 into what is standard price, sir? Very easy. That also we know 2,400, 650. 2,400, 650. Standard price we already know 2,400, 650. Sir, what about revised actual quantity? Very simple. Actual quantity rewritten in standard proportion. Total actual quantity is equal to how much? 400. This will be rewritten between material C and material Z in standard mix. What is the standard mix? Which we already know 70%, 30%. 70%, 30%. Now what is 70% and 30%, Ray? 400. This will be 280. This will be 120. So which means here it will be 280 and 120. That's all. You have got all the numbers. All you have to do is the total it up and then put it over here in the formula. Okay. Material price variance, you know the formula. 3 minus 2, 1 minus 3. This is 4 minus 3. This is 1 minus 4. That's all. You'll be getting your answers. Done? So with this, we are done with material variances. So next, we'll be going to what, Nana? Labor variances. Now let's continue with the labor variances. Okay. Very easy. Similar to material variances only. Here. Labor cost variance divided into, there it is price. Here it is rate. There it is usage variance. Here it is efficiency. The concept is the same. And efficiency will be further divided into mix as well as yield. There also it is mix and yield. Same 4 formulas. What is the first formula there? SQ into SP. Here it is SH into SR. There we call it as quantity. Here we call it as hours because it is labor. There we call it as price because it is material. Here we call it as rate, except that everything else is same. Sir, what do you mean by that? So there the first formula is SQ into SP, correct? What is SQ? Standard quantity of raw material required for actual output. Here also we have SH. What is SH? Standard hours of labor required for actual output. The concept is exactly the same. The thing is that in material you have quantity, here you have hours. There you have price, here you have rate. Okay. So the formula is also same. Cost variance is divided into two, rate as well as efficiency. If there is only one type of labor, you will stop here. Fourth formula will not come. Mix and yield also will not come. There to material. If there are multiple types of labor, then you will have mix as well as yield, which means formula 4 also will come. Okay. Right. Formulas you tell me. Same. So labor cost variance divided into labor rate variance, labor efficiency. Efficiency will be further divided into mix as well as yield. Fantastic. Now, formulas 1 minus 2, 3 minus 2, 1 minus 3, 4 minus 3 and 1 minus 4. What is 1? SH into SR per hour. What is 2? AH into AR per hour. What is 3? AH into SR per hour. What is 4? RAH into SR per hour. This exactly the template is similar to material variances. What is 1 of material variance? SQ into SP. 1 of labor variance SH into SR. 2 of material variance AQ into AP. 2 of labor variance AH into AR. 3 of material variance AQ into SP. 3 of labor variance AH into SR. 4 of material variance RAQ into SP. 4 of labor variance RAH into SR per hour. Yeah, the template is exactly the same. There RAQ means what? Actual quantity rewritten in standard proportion. We have seen problems as well, right? We have solved the problems. Same here also. RAH means actual hours rewritten in standard mix. Concept is exactly the same. Everybody got it? Fantastic. But what you need to understand with this is that this whole classification that I've given without idle time. So what is idle time, sir? We'll see that. See here. First of all, let's try to understand what is idle time. Nana, usually number of hours paid is equal to number of hours worked plus idle hours. Sir, what do you mean by that, sir? Which means eventually you'll be paying for number of hours that labor did not work? Yes, the answer is yes. So which means suppose you worked for 8 hours and 1 hour you did not work. Total is 9 hours is what you have spent in the factory. As a company, I'll pay you for 9 hours, not for the 8 hours you have worked. So which means I'll pay for the number of hours that you have worked, plus I'll also pay for idle hours. The total hours put together, we call it as hours paid. So therefore, hours paid is equal to number of hours worked plus idle. In other words, hours paid, which we represent as HP, is equal to hours worked, HW, plus IR, means idle hours. So based on this, how the classification will change, see here. Very interesting. Labor cost variance is divided into rate and efficiency. Till here, it's exactly the same. 1 minus 2, 3 minus 2, 1 minus 3. Difference. Here comes the change. From labor efficiency variance, if there is idle variance, it will be further divided into labor idle time variance as well as revised efficiency. Okay? And revised efficiency variance will be further divided into mix as well as yield. All right. So what do you mean by this? The logic is normally, if there is no idle time, then this will not come. Means labor cost variance will be divided into rate and efficiency. Efficiency will be further divided into mix and yield. That's all. But because there is idle time, one extra step will come. That's it. Okay. So what about formula? That is interesting. Labor cost variance 1 minus 2. Problem. Rate variance 3 minus 2. Problem. Same. Efficiency variance 1 minus 3. Problem. Okay. Then what about idle time variance? For this, there is no formula based on number. Idle time variance, it is simple. Idle hours into standard rate per hour. How to calculate idle time variance? Idle hours in standard rate per hour. Then what about revised efficiency variance? Exactly the same formula. Sir, labor efficiency variance is 1 minus 3. Out of that, you have already removed idle time variance. Then revised efficiency variance is also 1 minus 3. Yeah. But as you can see, I've put a dash over here. Sir, what is that, sir? This is 1 minus 3. This is 1 minus 3. What is 1 minus 3 first of all? SH into SR per hour minus what is 3? AH into SR per hour. What is AH? In this 1 minus 3, AH means AHP. AHP means hours paid. So in this 1 minus 3, AH means actual hours paid. From actual hours paid, once you remove idle hours, from actual hours paid, once you remove idle hours, then what will be left over is hours worked. Therefore, in this 1 minus 3, the formula is the same, but it is not this 3. You should not be taking actual hours paid. Instead, you should be taking actual hours worked. That is nothing but this labor revised efficiency variance, where once you remove idle time, this is what that will be left over. Got it? Fantastic. Then from this only you will be getting mix and yield variance. So because you are getting mix and yield from this, and here already you are taking hours worked, then in mix and yield also here you should be taking hours worked only. So therefore, if you look at the formula 4 minus 3 dash as well as 1 minus 4, in 4 minus 3 dash, actual hours means actual hours worked only. In 4 also, revised actual hours means revised actual hours worked only. Why here always you will be having hours worked? Because you have taken it from labor revised efficiency variance, which is nothing but hours worked over here. Got it? Don't worry, you will be getting 100% clarity once we start doing sums. Finally, let's revise the concept. See, you come across a question about labor variance and there is no idle time. Aha, very happy, sir. Then what is the formula? See whether there is single labor or multiple labor. Single labor means labor cost variance divided into labor rate and efficiency. That's all. Sir, multiple labor, sir. Then efficiency also will be further divided into mix as well as yield. Formula, sir. 1 minus 2, 3 minus 2, 1 minus 3, 4 minus 3, and 1 minus 4. Sir, what is 1, sir? SH into SR per hour. What is 2? AH into AR per hour. What is 3? AH into SR per hour. What is 4? RAH into SR per hour. Done? Sir, if there is idle time, then what's going to happen? Here it comes tricky. So you already know that number of hours paid is equal to number of hours worked plus idle hours. Okay, sir. Now, so can you go through the entire classification? If there is idle time, yes, sir. Labor cost variance 1 minus 2 divided into labor rate and efficiency 3 minus 2 1 minus 3. Efficiency will be further divided into idle time variance and revised efficiency. Idle time variance is idle hours into standard rate per hour. Revised efficiency is generally balancing figure. Why it is balancing figure? Because once you know this and this from this, if you remove this, automatically you should be getting this one. Na? So this can also be written as balancing figure, because suppose here it is 1000 favorable. Are you able to understand? Okay, let me put it. Here it is 1000 adverse. Here it is 200 adverse. Then automatically this should be 800 adverse. So it's a balancing figure. Or 1 minus 3 dash. 3 dash is nothing but hours worked you will take. That's the only difference. 3 means hours paid. From this again you have mix as well as yield. Therefore here also hours worked will come. That's all you have. Chalo. Overhead variances we'll see later. Right now let's go and solve sums. The labor based questions. This is a steady metal question, Anna. Let's take this because you have multiple labor as well. A good question for it. So, guys are ready? Chalo, now see. So in this question, what's happening? The standard labor component and the actual labor engaged in a week for a job or as under. So important word. Let's underline. Skilled, semi-skilled as well as unskilled. Standard number of workers in the gang. So talks about standard mix. Standard wage rate per hour. This is nothing but SR. Actual number of workers in the gang. This is but actual mix. Actual wage rate per hour. This is AR. During a 40-hour working period, the gang produced 1800 standard hours of work. Calculate labor efficiency variance, mix variance, rate variance, and labor cost variance. Right? That's it. That's the question. So now, tell me one thing. You've got single labor or multiple labor? Sir, multiple labors. Okay. Do we have idle time? Sir, yes, sir. Because specifically he has asked, as you can see here, labor efficiency variance, mix variance, rate variance, labor cost variance. Sir, what about idle time, sir? Do we have idle time in this particular question? You people tell me. Huh? Do we have idle time in this particular question? Somebody is saying yes. Okay, idle time is not there. In this question, it is not there. There's nowhere it is given, and he did not ask as well. Right, chalo. So without idle time. Without idle time means what will be our classification, sir? Very easy, sir. Labor rate variance be divided into, sir. Labor, sorry. Labor cost variance will be divided into two, sir. Labor rate variance and labor efficiency. Because we have multiple labor, there will be further classification of labor mix variance and labor yield variance. So this will minus 2, 3 minus 2, 1 minus 3, 4 minus 3. I'm teaching you how to solve problems faster in the exam. This is purely exam oriented. I'm not going with any logics right now. So 1, 2, 3, 4. First one will be SH into SR per hour, correct? Next AH into AR per hour. Next AH into SR per hour. Next RAH into SR per hour. Simple. Yes. How many types of labor we have got? Skilled, semi-skilled, unskilled. Having your totals over. Done with this? Oh, fantastic. Okay. First, SH. What is the abbreviation for SH, sir? SH means standard hours for actual output. Sir, do we need to calculate this or it is given in the question? It is given in the question, sir. How, sir? Here. The gang produced means this is nothing but actual output. Produced 1800 standard labor hours of work. He said produced 1800 standard hours, which means it is nothing but standard hours for actual output. When I can say you have produced 1000 units, or I can say you have produced equivalent units in 10 hours. What I'm trying to say? In both the cases, I'm actually trying to mention you how many number of units that I've produced. But either it can be in terms of units, which is straightforward. Sometimes it can be in terms of hours as well. So what he's trying to say is that he's telling you this much of, see here. During the 40-hour working week, the gang produced, which means it is actual output. But he did not give it in terms of units. He gave it in terms of hours. So hours for actual output is nothing but standard hours. What is the abbreviation of standard hours? Standard hours for actual output. Therefore, 1800 is nothing but SH. 1800 hours. But the problem is this has to be divided between skilled, semi-skilled. For that, I should be knowing standard mix. Do I know that? Yes. 32 is to 12 is to 6. 32 is 12 is to, get nana? 1280, 480, 40. So this will 1280, 480, 240. 1280, 480 and 240. Standard rate per hour, I think that's given in the question. You can copy paste 3, 2, 1. 3. Okay, what about actual hours? Very easy, sir. Sir, how it is easy, sir? Very simple, Nana. See, each worker can work for 40 hours per week, right? How many actual number of workers you have got? 28, 18 and 14. These many employees. In this 28, every employee can work for 40 hours. That's the actual hours that he can work. So 28 into 40 plus 18 into 40 plus 4 into 40 is nothing but actual hours. So 20, 28 into 40 plus 18 into 40 plus 4 into 40. That is nothing but actual hours. Actual hours 100. But I need also 28 into 40 kitna? Usual also I need 720. 1009. Okay, so 2000. So 1120, 720, 160. What about actual rate per hour? 432. 4. Okay, next actual hours already we know. 1120, 720 into standard rate per hour 3 to 1. Correct? Standard rate per hour already we know. 3 to 1. Revised actual hours. Total actual hours is how much? Sir, just now we have calculated 1000. This should be rewritten in standard proportion between SK, SSK, QSK. Skilled, semi-skilled and unskilled. What is the standard mix rate? 32, 12, 6. 32, 12 is to, you get 1280, 480, 40. 1280, 40, 1280, 480, 40. That's all. Okay, you total it up. You already know the formula. You put the numbers over here. Done and dusted. That's all. Sometimes he'll ask you to do individually also. What about skilled? For skilled, how much will be the cost, rate, efficiency, mix and yield? That also you can calculate. Then what you will do is that you will subtotal this. That's all. And for semi-skilled, subtotal this. And for unskilled, subtotal this. Sometimes he'll ask you to do total. Whichever way. Look at the question, the way he asks, accordingly you adjust yourself. Got it, Nana? Chalo. You're done with this. We'll also do one problem based on idle time. Okay? Ready metal question only. Based on idle time. Look at the question. EM is a ready metal question only. DM is a denim brand specializing in the manufacture and sale of hand-stitched jean trousers. DM manufactured and sold 10,000 pairs of jeans during a period. Information relating to the direct labor cost and production time per unit is as follows. We've got direct labor, actual hours per unit, standard hours per unit, actual rate per hour, standard rate per hour is given. During the period, 800 hours of idle time was incurred. Idle time is given. But do I have multiple labor? No, multiple labor is not. So idle time is there, but multiple labor is not there, which means what you'll have labor cost variance divided into rate and efficiency. Efficiency will be further divided into idle time as well as revised efficiency. Mix and yield will not come. Yeah. So all I need to do is that idle time variance and labor efficiency variance. Sir, what is this, sir? Idle time variance and labor efficiency variance means what is that he's actually trying to ask? This is where many students tend to get confused. I'll give you clarity. Don't worry. That's the reason I'm solving this. You guys are ready? Chalo. First, let's put the classification. Always, when you start solving any standard costing sum, first you put the classification. It becomes very easy. Labor cost variance divided into rate variance. This efficiency variance is actually further divided into idle time variance, revised efficiency. Formula will be 1 minus 3 minus 1 minus 3, where you'll have hours. This formula is idle hours in standard rate per hour. Here it is 1 minus 3 dash. Correct? Huh? Sir, what is this, sir? But in question, he has asked you efficiency variance and idle time variance. That is where when idle time and efficiency variance has been asked together, what he is meaning is the question, the intention of it, of the question guy is there is no confusion about idle time variance. This is what he has asked. When he means idle time, this is what he has asked. This is what we need to calculate. When he means efficiency variance, he is not talking about this efficiency. This revised efficiency only, he is calling it as efficiency problem. Revised efficiency variance itself has been referred by your institute as efficient. So this is where you got to be careful. This is where many students they get confused with. Faculties also, for that matter. Hello. Let's put the formula. 1, 3 is enough. First one, SH R per R. AH in R per R. AH in SR per R. And because I need to calculate this one, because idle time variance is calculated separately, here it should be hours worked only. Therefore, I will rewrite this formula as AHW because actual hours worked. So I'll not be calculating this. I'll be calculating this and clear? Okay, now first let's start with idle time variance. What is idle time variance? Directly we can calculate. How much is the idle hours, right? 800 hours given. What is your standard rate per hour? That is also given in the question. You can see the question. Idle time is given 800. Standard rate is also given. Well, that's your idle time variance. And remember, get 80,000. Always idle time variance is adverse. I already told you. What do you mean by adverse? Any variance that actually reduces your actual profit is nothing but adverse variance. Now tell me, when it comes to your so-called idle time, will it reduce your actual profit or increase your actual profit? Reduce only, na? Why? Why it will reduce your actual profit? Because you are paying for nothing. Idle time means what? That guy is not working out anything, but still you are paying. Not working for you, but still you are paying. You are paying for nothing in return. So therefore, it will always reduce your actual profit. Therefore, always adverse. Idle time variance is always adverse. Clear? Okay. Then what about efficiency variance, sir? You know the formula 1 minus 3 dash. We have 1 over here. Calculate 1. Then calculate 3 dash. 3 dash is nothing but actual hours work. Your answer. So what is 1? SH. What about SH, Nana? Standard hours for actual output. What is standard hours for actual output? Very simple. Standard hours per unit is given 0.6. Actual output 10,000 pairs of jeans. So standard hours for actual output 0.6 into 10,000. 0.6, 10,000. Get here actual hours worked in standard rate per hour. Okay, this is standard hours only. 1,000 in standard rate per hour is how much? 0.6 into 10,000 is nothing but standard hours. Standard rate per hour is how much? So SH into SR per hour will be AHW, actual hours worked is how much? Actual hours worked. Idle hours is already there, which is 800 idle hours. What about total actual hours paid? Given in the question. Total, you can see the question over here. Actual hours per unit is 0.64. 0.65 in 10,000 units, 1,500. Total actual hours paid. That you reduce idle hours, which is 800. In that case, how many hours you have worked? 5,700. Standard rate per hour is 100. 5,70,000. 1 minus 3, 30,000. 30,000 favorable. Plus 6 lakhs minus 5,70,000. 30,000 favorable. So it will be 30,000 favorable. 30,000 favorable and 80,000 adverse will be 50,000 adverse. So this labor efficiency variance will be 50,000 adverse. Anyway, that we don't want. Our answer is 80,000 adverse and 30,000 favorable. That's all. 80,000 adverse, 30,000. Done with labor. Okay. Chalo. What is the next one? We have overhead variance. Now, when it comes to overhead variances, both fixed and variable will simultaneously. After that, we'll go. Okay. Right. Now, when it comes to overhead variances, what you guys need to understand is that the first step is make the overhead variance calculation. First, you need to calculate SR per hour. That only do anything else. Most of the time, sometimes this will be the question, sometimes this will. Sir, what is this, sir? Standard rate per hour of overhead. Whatever the overhead that is. If it's variable overhead, standard rate per hour of variable overhead. If it is fixed overhead, then it will be standard rate per hour of fixed overhead. Doesn't matter. If it is total overheads in some questions, then standard rate per hour is nothing but total overheads divided by total hours. And the point. Anyways, so this step is mandatory, Nana. Whatever I say, go in that order only. Things will be very easy. Standard rate per hour is equal to budgeted variable overheads divided by budgeted hours. Remember this. Standard rate per unit is equal to budgeted variable overheads divided by obviously per unit. Therefore, you should divide it with number of units. That is nothing but BOP, budgeted output. So, variable overhead cost variance will be divided into two, expenditure and efficiency. The formula is the same, 1 minus 2, 3 minus 2 and 1 minus 3. So, what is 1? SH into SR per hour, similar to labor variance. What is 2? AH into AR per hour, similar to labor variance. 3. AH into SR per hour, which is again similar to labor variance. But this is based on time. When it comes to overheads, the formulas can be based on output as well, because overheads are indirect cost. So when they are indirect cost, they are dependent on somebody, just like a parasite. Therefore, they can be dependent on time, they can be dependent on output. From both the perspectives, you can see the. So therefore, either it will be SH into SR per hour or it will be AO into SR per unit. Here it will be AH into SR per hour or SO into SR per unit. Sir, what is this, sir? How to remember? I'll tell you. It's very easy, Nana. Whenever SH comes, you should think opposite in terms of output, AO. Whenever AH comes, think opposite in terms of output, SO. Both are exactly the same. Sir, what is that, sir? Standard hours means what? Standard hours required for actual output. Correct? Let's say 1 unit is taking standard hours. Actual output is 500. Then what is SH? Standard hours for actual output. 2 hours per unit into actual output is 500. Into standard rate per hour is 10. Yeah. Now, when it comes to output, it is AO into SR per unit. AO is nothing but actual output, which is 500. Here also actual output is 500 only. SR per unit means standard rate per unit. If 1 unit takes 2 hours and each hour the rate is 10 rupees, then per unit the cost is 20 only. 1 unit is taking 2 hours, per hour the rate is 10 rupees, which means per unit the cost is 20. So if you can see whether you apply this formula or this formula, the answer is exactly the same. Then why are we having two formulas, sir? It is based on the information that is given in the question to make the answer faster. I mean, to write the answer faster. For example, if SR per unit anyway will be calculating as the first step only, na, SR per hour and SR per unit. If in the question actual output is given, then directly we'll go for this formula. You understand what I've told you, right? Okay. Second formula is actual hours into actual rate per hour, which is nothing but actual variable overheads, or AO into AR per unit. Third one is AH into SR per hour. So AH means opposite, SO into SR per unit. That's all. Most important point here is when I say AH, it is actual hours paid or actual hours worked. The answer is actual hours worked only. Why? because we are talking about variable overheads. Variable overheads means it is a variable cost, and variable cost will vary only when there is output, and there will be output only when you work. In idle hours, there will be no output. When there is no output, there is no variable cost. Here, therefore, AH means it is obviously actual hours worked. Okay, done. Then why did I highlight these three formulas? Because based on my experience of solving more than 500 sums in standard costing, most of the question, these are all the formulas that will come in handy. There will be exceptions where we'll be using other formulas as well. But that's the reason I've highlighted it, purely based on my experience. That's all. For one, we'll be using AVO int SR per unit. For two, we'll be using actual variable rates. Sir, actual variable rates is not a formula, na, sir. Yeah, it is not a formula. It means it will be given in the question. What does it mean? It means it will be given in the question, which means majority of the questions, formula number 2, which is nothing but actual variable rates, will be given in the question, which can also be represented as AH into AR per hour in terms of hours, or AO into AR per unit in terms of units. Here, actual hours into standard rate per hour, and remember, it is actual hours work. Very, very, very important, because this is where many students do miss. Are we done with this variable overheads? Okay. So when it comes to overheads, what is the most important thing you need to remember? Step 1. What is step 1? Calculation of SR per hour and SR per unit. Will it be given in the question? Yes, sometimes. If it is not given in the question, then SR per hour is equal to budgeted variable overheads divided by budgeted hours. SR per unit is equal to budgeted variable overheads divided by budgeted units or budgeted output. I gave you the logic behind variable overhead efficiency. That is nothing but this one I've explained. Now coming on to fixed overhead variances. Now, before we move any further, I've told you many times, what is that? Overhead variance means what is your step 1? SR per hour and SR per unit. What is the formula for SR per hour, sir? Budgeted variable overheads divided by budgeted hours. Here it is variable overheads. Here it should be fixed overheads. Budgeted fixed overheads divided by budgeted hours. Simple. SR per unit, budgeted fixed overheads divided by budgeted output. Now, what about the formula? Very simple. Fixed overhead cost variance will be divided into expenditure and volume. Okay. And volume will be further divided into capacity, efficiency, and calendar. Remember this as C. There is a group in interna. C is capacity, efficiency, calendar. Formulas 1 minus 2, 3 minus 2, 1 minus 3, same. 4 minus 3, 1 minus 4, same. But here calendar variance additionally it will come, which you need to specifically remember, 5 minus 3. Now, capacity variance, I gave you two formulas, 4 minus 3 and 4 minus 5. What is that, sir? You will see that. I'll tell you. Just wait. So, because there are 5, how many formulas will come when it comes to fixed overhead variances? 1, 2, 3, 4, 5. What is the first one? SH into SR per hour. For this, what is the alternative formula? SH means AO will come. AO into SR per unit. Okay. Second one is actual fixed overheads. Actual fixed overheads, how you'll remember? Actual hours into actual rate per hour, or actual units into actual rate per unit. Got it? Third one is budgeted fixed overheads. Budgeted hours into budgeted rate per unit, which is nothing but standard rate per unit. Sorry, budgeted hours into budgeted rate per hour, which is nothing but standard rate per hour, or budgeted output into standard rate per unit. If you take units, multiply with rate per unit. If you take hours, multiply with rate per hour. Then what about this? Is this a formula? No. When I write BFOH, it means it will be given in the question. When I write AFOH, it means the number will be directly given in the question. Yeah. Fourth one is AH into SR per hour. Here also AH means AHW only. So what is that? We'll see later. If there is AH, the alternative formula will be opposite, SO into SR per unit. That's what we have seen here as well. AH into SR per hour or SO into SR per unit. SH into SR per hour or AO into SR per unit. Same stuff here. SH into SR per hour or AO into SR per unit. AH into SR per hour or SO into SR per unit. Now, another important thing that you guys need to understand is that I'm covering everything right now. Some of you might feel the formulas are intimidating. No. Once you learn this, the problems will be very easy. Trust me, that's how it's gonna be. Next, last one. PFOH means possible fixed overheads, which can also be called as possible hours into standard rate per hour, or the frequently used formula is we'll take budgeted fixed overheads, we'll multiply with actual days by budgeted days. All these things have got logics, but we don't have time to discuss. But one thing what I can tell you is, the logic that many students miss is, when it comes to fixed overhead variances, we are talking about fixed cost. That's why it is called fixed overheads. And we know the nature of fixed cost. It remains fixed irrespective of change in output. When fixed cost or fixed overheads remains fixed irrespective of change in output, why do we have fixed overhead volume variance? Fixed overhead volume variance means because of change in volume, fixed overhead should change. But the nature of fixed cost is such that it will not change irrespective of change in volume. Na? So this doubt, most of the students, they will not get it, or if they get it, they'll not be able to understand why it is. The answer is very simple, because of concept of absorption, that which you should have learnt in overheads chapter. When it comes to concept of absorption, you try to absorb your fixed overheads based on actual units produced. Therefore, more the actual units that you produce, more will be the fixed overheads absorbed. Less the actual units that you produced, less will be the fixed overheads absorbed. Are you able to understand? So, fixed overheads is not changing along with units. That is not the nature of fixed cost. When we see the definition of fixed cost, it remains fixed irrespective of the change in output, correct? But here we are not talking about change in the fixed overheads. We are talking about change in the absorption of fixed overheads. Got the point? So more the actual output produced, more will be the absorption of fixed overheads. Less the actual output produced, less will be the absorption of fixed overheads. Beyond this, I can't go because it's a revision session. Otherwise, the absorption concept itself will take more than 30 minutes. Yeah. So that is the reason here AH means you should be taking actual hours worked only, not actual hours paid. Because in idle hours, there will be no actual output. Therefore, there will be no absorption of fixed overheads. Now, this fixed overhead volume variance will be further divided into capacity, efficiency, and calendar. Right. Now, let's go with the formulas. When it comes to fixed overheads, step 1, SR per hour, SR per unit calculation. SR per hour, budgeted fixed overheads divided by budgeted hours. SR per unit, budgeted fixed overheads divided by budgeted output or units. Okay. Variance classification, fixed overhead cost variance divided into expenditure, volume. Volume will be divided into capacity, efficiency, calendar. Fixed overhead cost variance 1 minus 2, then expenditure 3 minus 2, volume 1 minus 3, capacity, efficiency, calendar. Capacity 4 minus 3, efficiency 1 minus 4, calendar will be 5 minus 3. Capacity can be 4 minus 3 or 4 minus 4. When is that? I'll tell you. Now, let's go to the individual formulas. 1, 2, 3, 4, 5. 1, SH into SR per hour, or AO into SR per unit. 2, actual fixed overheads. Alternative formula, actual hours into actual rate per unit. Actual hours into actual rate per hour. Actual output into actual rate per unit. Here, next. Third one, budgeted fixed overheads, which is nothing but budgeted hours into standard rate per hour, or budgeted units or output into standard rate per unit. Fourth one, actual hours into standard rate per hour. Actual hours worked into standard rate per hour here. Alternative formula, SO into SR per unit. Here, that is this one. Finally, possible fixed overheads can also be referred as possible hours into standard rate per hour, or the frequently used formula, budgeted fixed overheads into actual days by budgeted days. Now, what about this? Sometimes calendar variance will not come. The question. If calendar variance does not come, then phi will not come. If phi does not come, then capacity variance formula will be 4 minus, not 4 minus 1. Without phi, how will you calculate 4 minus 1? But sometimes if calendar information is given in the question, like calendar days, budgeted days is equal 25, actual days is equal 22, like that he will give information in the question. If this information is there in the question, then calendar variance will come, which means formula number 5 will come, which means the formula for capacity variance will be 4 minus 1. This much is clear, everybody? Now, the beauty of these formulas is, if you can look at your study material, there is something called efficiency ratios topic. That efficiency ratios formula also, we can derive it from this itself. How is that? I'll tell you. There's a small trick. So that now you know variable overheads and fixed overheads formula, we can easily play with all the sums. Are you done with this? Okay, let's revise this one more time. Variable overheads formula. Variable overhead cost variance will be divided into what? Expenditure and efficiency. 1 minus 2, 3 minus 2, 1 minus 3. First step is what? For any overhead variance, SR per hour, SR per unit calculation. What is SR per hour? Budgeted variable overheads divided by budgeted hours. What is SR per unit? Budgeted variable overheads divided by budgeted output. Okay. Now formulas you tell me. 1, SH into SR per hour. Alternative, AO into SR per unit. 2, actual variable overheads, which is nothing but AH into AR per hour, or AO into AR per unit. Next, third, AH into SR per hour. AH means actual hours worked. Here, because we are talking about variable overheads over here. Alternative formula, SO into SR per unit. That's all. Clear with this? Next, fixed overhead variances. First step when it comes to overhead variances, SR per unit, nothing but budgeted fixed overheads divided by budgeted hours. SR per unit, right? Budgeted fixed overheads divided by budgeted units or budgeted output. SR per hour is equal to budgeted fixed overheads divided by budgeted hours. Okay. Now, what about the formula? Fixed overhead cost variance divided into expenditure, volume. Volume will be divided into CEC, capacity, efficiency, calendar. Now, 1 minus 2, 3 minus 2, 1 minus 3, 4 minus 3, 1 minus 4, 5 minus 3. This 4 minus 3, if there is no phi, it will be, if there is phi, it will be 4 minus 5. If there is no phi, it will be 4 minus 3. Okay. Now, let's go for individual phi formulas. First one, SH into SR per hour, or AO into SR per unit. Second one, actual fixed overheads or actual hours into actual rate per hour or actual output into actual rate per unit. 3. Budgeted fixed overheads or budgeted hours into standard rate per hour or budgeted output into standard rate per unit. 4. Actual hours into standard rate per hour. Here you should take actual hours worked only, or standard output, that is SO into SR per unit. Last one, possible fixed overheads, which is nothing but possible hours into standard rate per hour or budgeted fixed overheads into actual days by budgeted days. Are we done with this? Clear? Let's go for some questions now. Fatafat, we'll do it. Okay. For efficiency ratios first, because this efficiency ratios is again linked to fixed overhead variances only. Okay. No need to buy hard all these formulas, Nana. Capacity ratio, efficiency ratio, activity ratio. I'll tell you how to remember that. Next we have, okay, anyways, let's finish this off. Efficiency ratio. Now see here. What is he asking you in this question? Efficiency, activity, capacity. Tell me one thing. Try to recollect your fixed overhead variances. Fixed overhead efficiency formula. Fixed overhead efficiency formula. Sir, cost, fixed overhead cost is divided into expenditure and volume. Volume will be further divided into capacity, efficiency, calendar. So 1 minus 2, 3, 4 minutes. 1 minus 1 minus 4 minus 3, 1 minus 4. 1 minus. So this is variance. Therefore, 1 minus another. We are talking about ratio over here. Therefore, write this as 1 by 4. Tell me what is 1? In terms of hours, you tell me. SH into SR. What is 4? AH into SR per hour. SR per hour gets cancelled. SH by AH is SH by H. The exact formula that we have got. So if you could remember fixed overhead variances, automatically all these ratios you will remember. SH is nothing but standard hours for actual output. AH is nothing but actual hours for actual output. Overhead efficiency is gone. Now tell me, SH by AH. What is standard hours? Product X takes 5 hours to make, okay. Product Y takes 10 hours. In a month of 25 effective days of 8 hours a day, 1000 units of X and 600 units of Y were produced. So this is your actual output. SH means standard hours for actual output. Standard hours is 5 for X in 1000 units of X. Standard hours for Y is 10 hours. So how many units of Y? 600 units of Y. So 5 into 1000 plus 10 into 6. How much you get? 11,000 hours. That will be your numerator. Actual hours kitna? Actual hours is how many employees you have got? 25 days, 8 hours a day, and how many employees? 50 employees. So which means actual hours is 50 employees. Each employee will work for 8 hours per day. Like that, how many days are there? 25 days. That will be your actual hours. 50 into 8 into 20, that 10,000. So 11,000 divided by 10,000. 100. That's all. That's your efficiency. Got it? Next. Okay, sir. What is the next one he has asked? Activity. Nana, activity is nothing but another name for volume. Activity is nothing but another name for volume. So fixed overhead volume variance, what is the formula? Sir, cost 1 minus 2, expenditure 3 minus 2, volume 1 minus 3. So fixed overhead volume, nothing but activity, 1 minus 3. That is equal to 1 by 3. What is 1? SH into SR per hour. What is 3? Budgeted fixed overheads. In terms of hours, budgeted hours into standard rate per hour. SR per hour gets cancelled. SH by BH. Don't cancel HH. SH by BH. Now, do I know SH already? Just now we have calculated 11,000. Budgeted hours is how much, Ray? Same formula over here for activity ratio. So activity is nothing but volume. 11,000 divided by budgeted hours is how much? Is it given directly? Yeah. For the year it is given. We are calculating this for only one single month. 1 month. So therefore, 1,02,000 divided by 12 months. Per month it is how much? 8,500. That's all. Divided by 8,500. Ho gaya. Got it? And finally, capacity ratio. So capacity variance. What is the formula? Capacity variance. Capacity, efficiency, calendar. There is no calendar here, which means the formula is 4 minus 3. 4 minus 3 means 4 by 3. What is 4? AH into SR per hour. What is 3? Budgeted fixed overheads. That is nothing but budgeted hours into standard rate per hour. So budgeted hours into standard rate per hour. Standard rate per hour gets cancelled. AH by BH. Same formula. Actual hours, you already know. What is your actual hours? Here we have calculated, na? Actual hours, 10,000. Budgeted hours, just now I've calculated 8,000. That's it. 200, you'll get the answer in. See, it's very easy. So, many people I see, they try to by heart all these formulas. No need of that, because we have already learned fixed overhead variances. Based on that, you can convert this into formula. This is the best way to remember. So, this is a small trick. Okay. Same logic you can apply, and you can do any sum, any question based on these ratios. Clear? Everybody, chalo, fantastic. Now let's go for fixed overhead question. Fixed overhead variance question, Anna. That's it. That formula, if you remember, it's done. So basically, you have to remember fixed overhead variances. If you remember that, everything very easy. Chalo, now this is actually your study material question. CMA study material. Okay, see here. Number of working days, budget actually is given. Output per man hour means units per hour. Number of units per hour is given. 1 unit, 0.9 units per hour. Overhead cost is given. Budget actual. So this is budgeted overheads, the actual overheads. He's not talking about whether this is fixed overhead or variable. Not talking about that. Just overhead variances. Means if he's saying just overhead variances, you need to understand that it is fixed plus variable. Fixed overhead plus variable overhead. Please keep that in mind. Man hours per day. That is nothing but labor hours per day. 8,000, 8,400. Budget is this much. Actually, got it now. Whenever there is a overhead variances question where fixed and variable both are put together, you solve it from fixed overheads point of view only. You solve it from fixed overheads point of view only. How, sir? I'll tell you. Shall we solve? Now, here. Now, first what I'll do is, remember the fixed overhead variances. First one is fixed overhead cost variance, but I'll call it as overhead cost variance. In my mind, fixed overhead variance will be running. But when I'm writing, I'll write it as overheads. That's all. I'll not write it as fixed overheads or variable overheads because it is put together. But in my mind, which variance is running? Fixed overheads. So fixed overhead cost variance is divided into what? Expenditure. But now I'll not call it as fixed overhead variance. I'll call it as overhead expenditure variance, overhead volume. Clear? Now this will be further divided into capacity, efficiency. Do we have calendar in this question? There are number of days given in a month, number of working days, budget 2022. Automatically calendar is. So overhead capacity variance, overhead efficiency variance, overhead calendar variance. Usually we'll call it as fixed overhead, but now we cannot call it as fixed overhead because it is overheads. Formula is the same. 1 minus 2, 1 minus 3. Because there is calendar, this will be 4 minus 5. 1 minus 4, 5 minus 3. You remember the formulas? See, 1 minus 2, minus 2, 1 minus 3, 4 minus 5 if there is calendar, 1 minus 4 and 5 minus 3. 1 minus 2, 3 minus 2, 1 minus 3, 4 minus 5, 1 minus 4 and 5 minus 3. Got it? So 1, 2, 3, 4, 5. Because we need to pick up the number, right? Let's write the formula. Frequently used formulas will write. Sir, what is frequently used formula, sir? Whichever I have highlighted over here. For 1, I'll be taking AO into SR per unit. For 2, AFOH. For 3, BFOH. For 4, AH into SR per hour. For 5, BFOH into AD by BD. Whichever I've rounded up, that formulas I'll take. Why, sir? Based on my experience of solving so many sums, I know that pretty much with these formulas only, the questions will be done. So first one is AO into SR per unit. Second one is AFOH. Sir, this is not a formula, na, sir. Yes, which means it will be directly given. Third, BFOH. Be directly given in the fourth, AH into SR per hour. Here it is actual hours worked. Last, FOH, budgeted fixed overheads into AD by. Here I cannot use the word fixed overheads, therefore I'll use the word. I'll remove the word F. Be referred as actual overheads. Here also I'll remove the word F, which be referred as budgeted overheads. Here also I'll be removing the word F, which referred as budgeted overheads in AD by B. Like this, you need to adapt yourself. Got it? Okay, now we have mandatory first step when it comes to overhead variances. SR per hour, SR per unit. What is SR per hour? Budgeted fixed overheads or budgeted overheads divided by budgeted hours. Do I have this information over here? Budgeted hours is how much? Question. Budgeted hours. And output per man hour. Okay. We'll be taking 1 unit per hour. How many hours? 8,000 hours per day. How many days? 20 days. So 8,000 hours per day into 20 days. Total budgeted hours will be how much? 1,000 into 20. Hours. Why 8,000 into 20? For that particular month, every day 8,000 hours, Nana. 20 days are there. So 8,000 into 20 days. So for that entire month, total hours will be 8,000 into. Now, budgeted overheads, it given in the question, 1,60,000. So 1,60,000 divided by 8,000 into 8,000 into 20 is how much? 1,60,000. Standard rate per hour is 1 rupee. Standard rate per unit. Budgeted overheads divided by budgeted output. Overheads in the question 1,60,000 divided by budgeted output. What is your budgeted output, Roy? Budgeted output. Budgeted output per man hour. 1 hour, 1 unit. 1 hour, 1 unit. Means for 8,000 hours, it will be 8,000 units. Means 8,000 into 20. Correct only, na? So 8,000 into will also be same rate. 1 hour per unit. Sorry, 1 rupee per unit. So standard rate per unit is 1. Standard rate per hour is also 1. Yeah, the logic is very simple, Nana. 1 hour, 1 unit. That's all. So how many hours are there? That many units will be there. Therefore, rate per hour and rate per unit both are same. Chalo. Let's start solving this. AO into SR per unit. What is your actual output? He's given in the question. I think actual man hours is given. So what is the alternative formula for this? Whatever you want, we can go. We'll do one thing. Actual output is nothing, but if you look at the question, 0.9 units per hour. In actual man hours is 8,400 per day into how many days? 22 days. Your actual output. The standard rate per unit is so 0.9 1,400. Did you understand what I've done? Actual output. Actual output is nothing but see here. Output per man hour. 0.9 units per hour. So how many hours? Because we are talking about actual output. All the numbers that you should take should be actual. So 0.9 units per 1 hour. For 8,500 hours, how many units? 0.9 units into 8,500. That is for 1 day. Man hours per day. Into how many days? 22. Therefore, actual output will be 0.9 unit per hour into 8,400 hours. That will be for 1 day into 22 days. That's what I've got here. That is your actual output. Into standard rate per unit, already I've calculated 1. Therefore, this will be 1,60,000. Next. Now, if you look at the actual rates, it's very easy and directly given in the question. That's the reason I told you I put the formula that way. This is your actual rates, 1,68,000. Max 60. Budgeted overheads is also directly given in the question. 1,60,000. Put that. Actual hours into standard rate per hour. What about actual hours? Do we have any actual hours? Yes. Just now we have calculated here. Na? Here. Actual hours means 0.9 actual hours. 8,400. 8,400 per day. So how many days? 22 days. That's your actual hours. The standard rate per hour is 1. Here. 8,400 hours per day. This is actual only, na? Total actual hours per month, 8,400 hours per day into 22 days. Simple. Into actual standard rate per hour, already we have calculated over here, 1 per hour. Therefore, 8,400 in lakh 84,800. Lakh 84,000. Got it? Last one, budgeted overheads. Budgeted overheads is 1,60,000 into 1,60,000 into actual days by budgeted days. What is actual days? 22 divided by budgeted days is 20 by 20. 1,60,000 in divided by 20. 1,76,000. Got it? Now we can have all the formulas. So overhead cost variance 1 minus 2. 1 minus 2 means 1,60,20. 1,60,20 minus 1000. Okay. P 1680 adverse. Minus na. Next overhead expenditure variance 3 minus 2. 3 minus 2 is 1,60,000 minus 1,68,000. It's also 8,000 negative. 8,000 negative means adverse. Volume variance 1 minus 3. 1 minus 3. So 1,66,20. 1,60 minus 3. 1,60. Positive. Favorable. 320. Volume variance is 320. Got it? Next, capacity variance 4 minus 5. So 4 is 1,84,800 minus 4 minus 5, 1,76,800. 8,800. Positive, favorable. Capacity variance is 8,800, favorable. Okay. Next, efficiency variance 1 minus 4. What is 1? 1,60,000 minus 1 minus 4. What is 4? 1,84,800 will be negative. 18,480 adverse. 1,480. Calendar 5 minus 3. 1,76,000 is 5 minus 3. 1,60,000 positive. 6,000 favorable. Calendar variance. So let's check the answers. Expenditure is 8,000 adverse. 8,000 adverse. Volume 6320 favorable. Volume 320 favorable. Capacity 8,800. Capacity 1,800 favorable. Next, efficiency 18,840 adverse. 18,480. 1,480 adverse. Correct only. Said 840. It's okay. Calendar is 16,000 favorable. Calendar. That's all. You see that? See, your institute would have done it in a different way, na? I have done it in a different way. That's okay. Chalta hai. You understand the point? If you are clear with the concepts, of course, I did not teach you the 100% concepts when it comes to revision session, but as you can see, all the cost variances are done and dusted. Damal. Got it? So this will really help you if you really want part 2 as well, where I'll be going for reconciliation, and sales variance is very easy. But if you want reconciliation as well, then definitely you put it in the comments. I'll not sleep today. Okay. Even at the early morning, 2 o'clock also, I'll put the video if you want it. Reconciliation and all that, right? I hope this video should have helped you for your examination preparation. If that's real, just put it a comment, whatever you want. I'll definitely make a video on that, right? I'll try to wake up the whole night and we'll do it together, okay? I'll stay probably along with you. What is there? For you, examination is important. Medically, it becomes important for me also. Hopefully, I think I've helped you with this particular session. Right now, I think the time is 10:30. Okay. Watch the video. I hope you guys will love it. Thank you.